What's going on, everybody? Welcome back to my YouTube channel. I know it's been a while. For those of you who are new here, my name is Sire Abram, and I trade options every single day. My main thing that I use is technical analysis, and that's how I gain my bias on the markets. Okay, so in this video, I'm going to be going over about 4 trades that I took this week, and I just want you guys to see how and what I'm looking for when it comes to taking some trades and just show you a little bit of what I know, okay? Before we get into that, so for 2023, I am starting back one-on-ones, mentorships, and I also plan on releasing a course very soon. So if you want more information on those 3 things, make sure to follow me on Instagram and check out my stories. That's where I usually post that stuff. My Instagram handle is at SIREABRAM. And also I will include that in the description. And I will also include the link to my one-on-one so you can book directly from there. Okay. So nonetheless, let's get right into it. So right here, this is SPY, S&P 500. This is what I traded, and this is what the group that I'm in, we traded for yesterday up until today, okay? So right before market closed at 3 p.m. Central Time, I called out a play. I said, swing SPY calls. I'm going light. So what that means is I am buying calls and I'm looking to sell them the next day. So swinging is when you buy something one day and you sell something the next day, okay? So why did I decide to do that? What made me think that was a great idea? So if we look at an 8-minute time frame, what do we see here? We see this high and we see this low. This low initiates the move to break this high. So we're just going to put a B here for break. All right, that is a terrible B. So let's use the text. Let's put a B here for break. Okay. So what I'm looking for is a break of a high. So what I'm going to look for in the future is the area that initiated, the area that started or created the move to break that high. So where did that happen? At this low. So if I take this whole candle and highlight it, this is what I'm going to use for as my demand level, okay? And if you are unfamiliar with some of the terms that I talk about are used within this video, don't feel, any type of way about it, because I'm going to teach you guys in my one-on-ones, mentorship, courses, and future videos. So don't feel discouraged about it. You will definitely be caught up to speed, okay? So as the day is about to end yesterday, where's price closing? Price is closing within this demand zone. This is where I'm expecting price to move higher. So this low initiated the break of this high. And what happens? We tap in here, move higher, tap in here, move higher. We see price is just dancing all on this demand level, okay? So when price closes in a demand level or in a supply level, that is a good indication, hey, maybe I should look to swing calls based on the structure that is presented, okay? So right here, as price closes in this demand zone, that is where I decided to swing calls, and I'm looking to take profit right here, okay? This is where my price target is for my swings. So we can see here, price closed. We opened at 382 from 379, ran up to 383, and we can exit the trade if we want, take partials, do whatever. And that was about a 50% return on this swing trade right overnight. So we bought Thursday right before close, sold Friday morning, okay? So now if we look here, what do we see? This high gets broken right there. What initiates the move to break this high? This low. So this green candle is the order blocker, the demand level we're going to look for. So as price sells all the way back off to this low that initiated the break of this high, I'm going to look for the same exact thing. So right here, low, break, move higher, retracement, go up. Right here, low, break, we moved higher, retracement, tapped in, go up. And that is where we have price going for the rest of the day. It simply was an easy, simple, clean trade throughout the rest of the day. So here's one entry you could have taken, and here's another entry you could have taken right there at 379.58. Stop loss 378.96. Played it all up for the rest of the day. So from when I called the swing for calls, 380 strike was 244. And then at close, they were at $836. So you would have made approximately about 590 bucks, something like that, 596. Use my calculator. 836 minus 244. Yeah, 592. You would have made 592 per contract. So if you bought 10 contracts, you would just take 592, multiply that by 10, and that's what you would have profited. $5,920. Okay. And that is all in the span of yesterday before close until the end of the day. So in a day, you would have made almost $6,000 just by taking this trade. These setups happen all the time within the market. If you miss it, you miss it, move on. You're going to find another one eventually. All right. And I'll show you guys some more examples, and you can see that a lot of this stuff is repetitive. Okay, so right here, this is Facebook, known as Meta. So if we look over here, we see Facebook is selling off, and that means the stock is going down. Okay, so this big black candle, this shows price selling. In between here, we have a fair value gap, and that's just an efficient price action. So right here, we take this high to this, or this low to this high. And in between here, that's where our fair value gap is. So as price runs right through it, I'm looking down on smaller time frames to find a potential entry point to play for the upside. So if I go down to a 30-second time frame, what do we see here? The same setup as SPY, same setup as what we just looked at. This high, this low initiates the move up to break this high. So there's our break. We can look for a retracement back down, which happens over here. We tap in and take off. And that's where we can take our entry point. In terms of stop loss, you can use the bottom of your area. You can use the bottom of the order block you want. You can use the bottom of whatever zone you want, just depending on how much you want to risk. Now, the reason why I use the bottom of this fair value gap as my stop loss is because dealing with stock options, or just stocks in general, it is very easy to get stopped out if you have a 10-cent stop loss. So we want to give ourselves some room to breathe. All right. So if I draw this out here, high, low, break, this low initiated the break of this high. And now we're looking for our retracement. We're looking for our reaction. Price takes off. So we would take our entry here. We can have our stop loss here. And then we can target this high right here, or some higher highs that we have prior to all of this. And that is the exact setup that I like to look for when playing calls. So far, we've seen two scenarios that have the exact same setup. Okay, so what does that tell you? This goes to show if you trade an ETF, if you trade S&P 500, for example, if you look at stocks, big stocks within that ETF, sometimes they're going to have the exact same setup. So it makes it super easy to trade multiple stocks at the same time because you're looking for the same setup each and every single trade. Okay. So same thing here. You saw Facebook gap up just like SPY. You saw Facebook sell off just like SPY. You saw Facebook run up for the rest of the day just like SPY. So right here, you would have played calls from 128 up to 130 at the peak. And that is a clean trade right there. That's literally, can't ask for more than that. That's perfect. And in terms of your targets, you can target this high right here. You can take some profit here. And then you can find different zones right here. So you can see this high, this low, initiates the break of this high. We retrace back down to it over here. Here you have another entry. Stop loss here, target higher, go back there and find higher targets. And there you go. You have two setups within one stock. And that's what you want to look for. All right. So now the next trade that I'm going to go over, this is with Forex. This is for US 30. So this is going to be a little bit different. Okay. So I played downside for this. So if I go to a daily time frame, what do we see here? We see we have this buy side liquidity. We have this high, and I'm looking for this to get taken out. So right here, we run through this high. All right, all right here. This high gets purged. This high gets taken out, whatever you want to call it. Up here, we have the break of these lows over here, which is initiated by this high, and that makes this a supply zone. So we have this order block that we're going to use as supply. All right, so once this supply gets tapped into, price sells off. As price is selling off, let's go down to a 1 hour time frame. Actually, let's stay here. And what do we see? Huge momentum down. In between here, we have an imbalance, fair value gap between this low and this high. So as price is around this area, I'm looking for potential sells. So if we go down to a 1 hour, what do we have here? Pretty much the same thing. So we have this high, this buy side liquidity gets purged right here, gets taken out just right there. And that's what that purple is indicating. And we sell off even more. So what we have to ask ourselves, well, where should we look to target? So if we're looking at finding price targets on this, what we need to do is we need to look for areas that initiated this move. Okay, so right here, we have equal highs, liquidity. This gets taken out. This high gets ran through. Where does that happen? This low on a smaller time frame initiates the move to break this high. So this is the same thing we've seen before, right? And I'll draw this out again for you. We see high, low, break, retracement, move higher. At that area that initiated that break of this high. So if we look at this right here, high, low, break. Here's the break. Retracement, move higher. Retracement, move higher. So I did not play this move to the upside. I played this move to the downside. So as soon as this gets taken out, I'm taking sells. I'm taking positions for this to go down. And that's all it means. So as this is going down, I'm in profit, okay? So once again, as we saw on a 4 hour time frame or a daily, we have this imbalance right here. So we leave behind this fair value gap. On a 1 hour, you see it's the same thing. Let's look right here. A huge candle down, fair value gap in between, this low, this high, retracement into that fair value gap, sell off from there, another entry. So from here, you have a clean move to the downside just from doing that. So right there, clean move here. And if you use this fair value gap as an entry, right there. So you got about, what, 617 pips, 472 pips on this. So where should you look to target? You should look to target the low that initiated the break of this high. So since this low initiated the break of this high, that's what we can use as a target for our downside, right? So instead of playing the upside, all we did is just play this retracement down. And that's all it is. We took the same setup, but just played a different position on it. And that's how you can win right there. Find a setup you like, and you can play upside for it. You can play downside for it if you understand what you're looking for. Once you find what works for you, you build your system and you stay consistent with it, and you can't lose, right? And it's just really that simple. So the second to last trade I'm going over today is with Tesla. And here we'll see the same setup. And this is a day trade from today where you buy and sell within the same day. So someone asked me, Sire, what do you see on Tesla? Do you think Tesla's going up? Do you think Tesla's going down? What are your thoughts? So at the time I looked at Tesla, it was around this area. So what do we see right here again? Low, high, low, break. So this high gets broken by this low right there. And that's where it is initiated from. High, low, break, retracement, move higher. So once this high gets broken, we need to see where did it initiate from? Where did it start? It started from this low that was on this black candle. So we're going to use this as a potential entry point. As price retraces back to it, we can take that entry there. As we leave, stop loss the bottom of that candle, or you can use the bottom of this low. And you see here, it was a clean move to the upside. So now where should you target? You can target this high, this high, this high, this high, wherever you want, essentially. And if we switch to a 1 minute time frame, you can see here, Tesla was not playing games today. And this was a great trade to the upside. So from 105 all the way up to 114, $8.84. Simply just on the few trades we went over today so far, Tesla, Facebook, SPY. If you would have started yesterday with $100, $200, whatever, you could have flipped that money so fast just with these few trades that I've shown you, that I put in the Discord, that I called out, and so forth. So there are always opportunities in the market. You just have to train your eyes to see them. And once you see them, you really can't unsee them. So that's why I'm always pushing towards education before you actually go out and start live trading. Because if you're going to risk your money, at least risk your money when you understand what you're doing. You need to work smarter and not harder. Okay, and for the last trade that I'm going to cover in today's video, it is NVIDIA. And I believe I did this on a 3 minute time frame right here. Perfect. So once again, we have the exact same setup. So you guys are seeing a lot of the same stuff, which is great, because I hope that you guys are able to start seeing this for yourself so you can replicate this. So right here, you see low, high, and then we see here's the break. So this gets broken here. So we have to ask ourselves what initiated the break of this high. So it's these lows over here. Price retrace back down to here, to this low, and we moved higher. So the reason why I have this on a 3 minute is because I took my initial position off of this fair value gap. Impulse up, we left between a fair value gap. So I took my initial position right here as we left. So I took a second position, which basically just averaged down right off of this. So we can see here, here's our break. This low initiated the move up to break that high. So I'll draw it again. Here we have a high, here we have a low, here we have a break, here we have a retracement, here we move higher. We retrace to the area that initiated the break of this high. Right there, took our entry here, stop loss here, and then target wherever you want. And this was a clean move to the upside. This was about I believe, a 60% return, if I'm not mistaken. So from 142.41 up until 144.78. So right there, simple trade, same setup. Those are just the setups I looked for this week. I didn't really look for anything else. This isn't the only type of trades that I take. There's multiple entry criteria that I like to look for. There's different entry models you can use. I go over those in one-on-ones. I go over those in mentorships and all that type of good stuff. But this YouTube channel is to keep things very simple. And I want to make this digestible for everybody, no matter what point you are in trading. So yeah, if you enjoyed this, feel free to put a thumbs up on the video, leave a comment, let me know what you enjoyed, let me know something that you learned throughout this video. And once again, if you want to book a one-on-one with me, my link is in the description. And in regards to information upon the course and mentorship, you need to look at my Instagram, because that is where I post that information. So I hope you guys enjoyed this. I hope everyone has a good rest of your day. And that is it. Thank you.